Yo, what's going on, guys? Bexio back, and today we got a brand new video. This time talking about Robinhood and how they just absolutely crashed and burned because of their earnings. But first, if you are watching this video and you are not subscribed, smash that subscribe button because we are on the road to 1,000 subscribers. Every single sub gets us closer to that first milestone there. Robinhood absolutely crashing their earnings. We might as well look at Robinhood. What other better platform than Robinhood themselves to look at Robinhood stock? So we can see, we'll zoom out. This was their IPO, massive spike to $70 and then just a big plummet. But recently, the biggest news is coming out from their earnings, which you can see right here. Just this massive move down 39, almost 40 bucks, all the way back down to $34, down 16% in the week. Massive moves on their earnings, and honestly might be deserved for the numbers they came out with. They were not good numbers at all. We can look down, have like a super simple view right here of earnings right in the Robinhood app itself. Right here, their estimated earnings was $1.36 per share, a loss of $1.36 per share. They actually came out with a loss of $2.02 per share, which is much higher than the estimate. So they missed on that by quite a bit. And it's not good to ever do that, to miss, especially on what they did. But they actually had a worse thing, which was their user growth, which is terrible. But we can look at earnings right here, like a simple, very, very simple overview from Google, talking about their earnings. See this Q3, this is the one that was Q3 2021. EPS was not a beat because it was right here. We can see it. You know, this was their estimated earnings per share was a big miss. And that shows even right here, revenue missed by 16%. That's pretty crazy. EPS per share expected -20, reported -07. So this has it, you know, a little bit difference for the earnings per share was better than expected, but their revenue was a lot worse than expected. Expected 437 million in revenue. They only reported 364. That is quite the difference. And their quarterly things, not really, you know, crazy things to look at. Revenue was up, but this year-over-year number, I don't think that it's necessarily the best thing because they did just IPO. So last year they weren't on the stock market. This year they are. I'm sure they still have their financials, but these numbers are going to be all kind of out of whack because of IPO things. But their revenue, they're up on revenue. Net income down, which $500 million loss on income. That is tough to see. They're obviously missed their shares. Their diluted EPS here was their thing that they completely missed on. Not good. Profit margin in the negatives. We're just not seeing great cash flow here for them for being a massive, you know, brokerage. They have a ton of users and stuff. They're just not more of that serious broker. They're more of the one of the people who just want to try and throw a couple $100 in and trade. There's very few people who long-term invest with Robinhood. Although they say that that's the opposite case. They have a lot of long-term investors. They don't have people that really do day trading. But I mean, I think Robinhood's kind of thought process for everyday people is it's just somewhere you can go to trade stock. And when you go more long-term, you always think of TD Ameritrade, Interactive Brokers, these big guys where you kind of go put the majority of your money for long-term thought. And then this article breaks down all of Robinhood's revenue stuff on their earnings. Obviously, you can see their shares tank because revenue falls way short of expectations on lighter crypto trading. That was a big problem for them. They had massive dogecoin trading in the prior quarter, which had a ton of money made for them, and that wasn't here this quarter. So you can see they have the chart here. Just as soon as they reported earnings, complete tank. They were not good numbers, very, very bad. See, for the third quarter, total net revenue came in at 365 million, missing the estimate of 431 million. That's what was in there before. They revenue increases 35% year over year, but we were well below second quarter's revenue of $565 million, which was bolstered by massive surge in crypto trading. So they went from $565 million to 365, a $200 million loss in revenue because there wasn't a massive hype meme coin that was on their platform. Dogecoin was that before. Tons of volume, everyone going in, trading that, and they made a lot of money off of that, obviously. And now there's not that meme. They don't have Shiba on Robinhood. If they did, they probably would have had the same numbers. So you see, of those third quarter transactions, 51 million came from cryptocurrency trading. Revenue from crypto trading totaled 233 million in the second quarter, helped by interest in meme-inspired dogecoin. So that's even more crazy numbers: $233 million to 51 million in one quarter because they didn't have a meme coin that was hyped on their platform. That is super crazy to think that it has that much impact on it. But even of this 565 million, 233 million was Dogecoin or crypto trading, mostly Dogecoin, let's be real. So, without that hyped up number, they probably would have looked pretty good this quarter, 365, because even if it was that 200 million is what they missed. So really it was $33 million from crypto that was really missed because that 200 million came in, and that was what bolstered this number. Maybe it'd be closer in numbers. Maybe it would have been, 395, 400 million, and it wouldn't have looked that bad. But now it looks pretty bad from their revenue from this. And the biggest problem for Robinhood is their loss of users, or a downturn in net accounts. You see this right here. The net cumulative accounts dropped to 22.4 million in the third quarter from 22.5 million in the second quarter. Monthly active users totaled 18.9 million, down from 21.3 million in the second quarter. This is not what you want to see for any company, especially one like Robinhood trying to grow and get more people, more customers on the platform. A move from 22.5 million to 22.4 million. So that's a loss of 100,000 net accounts, cumulative accounts. So 100,000 accounts have completely moved off of Robinhood, but monthly active users, which was at 21.3 million, is now at 18.9 million. So that's a loss of like more than 3 million users for, quarter over quarter, which is not what you want to see. That's just loss of interest. And I think that Dogecoin really, really played a huge part in Robinhood in their first quarter or their first earnings and stuff. And that might have been a big problem for them because it bolstered the numbers so high that getting back to those levels is going to be very difficult, and getting back to those users is going to be very difficult. And it's like it makes this quarter look worse, and like next earnings, if they report decent earnings, we're still going to look back to this and say they still aren't back to the users that there were when Dogecoin was a big thing or when all of this was talked about. So it might be a very actually bad thing to Robinhood that this Dogecoin thing happened to just kind of their numbers. And obviously this talks about reporting their loss of 1.3 billion. So that was their earnings per share thing that they missed. This quarter was about developing more products and services for our customers, including crypto wallets. And they've been saying this for how long now? So it's one thing to say, this quarter is going to be slower. We're focusing on development of these things. But if you continue to say that, it's going to become a problem. So hopefully these crypto wallets come out soon. They've been talked about for a long time now. So at some point, you can't start saying, the lack in growth is because we're focusing on development. You got to work both at the same, or actually execute on your development stuff so that it can cause growth. We're in a very weird spot with Robinhood here. And then the end of the article here says, looking ahead, Robinhood said it expects fourth quarter revenue no greater than $325 million. The company sees growth in line with 660,000 opened in the third quarter of 2020. So they expecting 700K accounts basically getting added. So maybe coming back in this next quarter. And then they've bumped their revenue down to $325 million. That could be just a strategic move from them saying, maybe we might actually be able to hit like $350 million or $400 million in profit or in revenue. But we'll project 325 so that we can beat that number and make ourselves look better. So that's something that could be playing a game there. But honestly, looking back, this was 325 is what they're expecting. And if we go back to this quarter was 365 million. So this just goes back to my point of talking about Dogecoin might have been a huge problem for Robinhood. Like coming out with their first earnings being $565 million, and that's being bolstered. That was amazing. Wow, they're doing so good. And then this next quarter is 365 million. They're down 200 million from before. So it's like, you're not doing as good as before. And even if they report these next numbers, If they end up hitting 325 million, people are going to say that's even worse than last quarter and nowhere near the quarter before. Like, we're in a downtrend here. That's not good. It's not a good look at all. The only thing that could bail them out is actually having account growth and user growth. That's something that could bail them out. But that is, at this point, the only thing I'm seeing that could really bail them out if they don't get their revenue up. So this Dogecoin thing, crypto, big trading that happened with Robinhood earlier in the year might have been, and even the GameStop stuff and AMC and all of those things, driving a lot of people to Robinhood. That might have been a bad thing for them in this longer term outlook because all of those numbers are inflated. And now getting back to those numbers is going to be very challenging. So Robinhood's got their work cut out for them. Not a good earnings report at all. They reported less users, less money, and they lost more money than they were expected to lose. So they got hit on all fronts. Makes sense that the stock is down the way it is. I mean, it's very hard to price Robinhood in the future. I probably wouldn't take a position in Robinhood, not now. I think they have a chance to be massive, but I think their numbers from the Dogecoin, GameStop, AMC, crypto trading days were heavily inflated. And that's going to be something a lot of people look back on and kind of compare these new numbers to for a while to come, I think. But we'll see how Robinhood does. I think they're a good company long term, but these hiccups are going to cost them a little bit in here in the short to medium term even. So we'll see what happens. But as always, guys, don't forget to smash that like button and subscribe. We're on the road to 1,000 subscribers. See you guys in my next video.